Strike Gold. Simplified Remade Mastery Edition. The ultimate artificial intelligent, AI-powered options strategy to dominate crypto stocks. To dominate trading. The Awakening. Your financial evolution begins now. This is not just trading, this is precision warfare, executed with science, AI, and strategy. Welcome to your elite playbook, crafted to help you extract profits from crypto and stocks using advanced yet easy-to-master tactics across all apps like TradingView, eToro, Thinkorswim, MooMoo, Crypto.com, and Coinbase. This is no longer guesswork. This is weaponized intelligence. Options made easy. Power define, call option equals you profit when price goes up, put option equals you profit when price goes down, options equals leverage control large moves with small capital. What leverage looks like. Let's say you have $1,000 in your trading account. 5-to-1 leverage equals you are controlling $5,000 worth of trades. 10-to-1 leverage equals you are controlling $10,000, 20-to-1 leverage equals you are controlling $20,000, 50-to-1 leverage equals you are controlling $50,000, 100-to-1 leverage equals you are controlling $100,000. Very risky for beginners. How much should you risk based on your experience? 1. Beginner, 6 months experience. Risk only 1% to 1.5% of your account on each trade. Use 5-to-1 to 10-to-1 leverage. Example. With $1,000, risk $10 $15 per trade, focus on learning, not flipping accounts. 2. Intermediate, 6-18 months experience. Risk 1.5% to 2.5% per trade. Use 10-to-1 to 20-to-1 leverage. Example. With $5,000, risk $75 $125 per trade, controlling $50,000 to $100,000. 3. Advanced, 18+ months, consistent profits. Risk 3% to 5% per trade. Use 20-to-1 to 50-to-1 leverage or higher. Example. With $10,000, risk $300 $500 per trade, controlling $200,000 plus. Only do this if you have mastered your system and psychology. 1 trade. 1 move. Total transformation. This is precision meets potential. The Precision Delta 10 method. Target, strike, repeat. Bullish setup. Buy call options with delta 0.30 to 0.45, bearish setup. Buy put options with delta 0.30 to 0.45, this is your high probability zone. Fast reactions. Smart premiums. Every entry is a calculated strike. Implied volatility, IV. The price of anticipation, IV equals market's forecast of price movement. Buy when IV is low, 20% to 40%, exit or sell when IV is high, 60% plus. Example. BTC at $68,000 IV at 38%, so we buy call. BTC moves to $72,000 and IV spikes. As a result, our option contract value doubles. Caution. Avoid buying before major news. IV crush can destroy your profits. Even if you are right on price, IV can still wreck your profits if mistimed. Vega. The volatility multiplier, Vega equals how much your option gains when IV increases. Use Vega 30 plus for 7 14-day options. Use Vega 50 plus for 30 or more day options. Enter early, exit before the news hits. Example. Option Vega equals 40. Check this after we place the trade in open positions on the trading app. IV rises from 35% to 45%. Value gains $4 and goes up from $2.50 to $6.50. Even without price movement. Smart exit rule. Exit when IV increases by 8% and 15%. Let's say around 10% to make it easier for beginners, and major news is about to drop. Capture gains and avoid the IV crush. Theta. Time is your enemy or ally. Theta equals time decay. For a buy, call, and sell, put option contract. Theta 0.01 to 0.05 and exit in 2 or 3 days if flat. Example. $3 option with Theta 0.05 then worth $2.95 tomorrow with no move. Time to exit or close your trade with a simple click. For exiting or closing a buy, call, or sell, put option contract. Theta 0.05 to 0.20 and exit in a profit range of 50% to 75% profit. Time equals money. Do not let it bleed you. Smart alerts plus technical precision. Set your intelligence network. Estimated time, a few minutes. Google alerts. Bitcoin ETF, Ethereum upgrade, Twitter, X, at WatcherGuru, at CoinDesk, at CryptoComs, calendars. CoinMarketCal, Crypto Panic, TradingView. Trading crypto options before the news hits. This strategy is built to help you win, not by reacting to news, but by mastering the moment before it hits. You are not just trading price, you are trading psychology and anticipation. The plan: 3 to 7 days before big events, like CPI, ETF approvals, Fed meetings, the market expects volatility. This causes implied volatility, IV, to rise, making options more expensive. Smart traders buy call or put options early, riding the wave of hype. The key is to sell before the news hits, avoiding the IV crush. Example 1. ETH ETF rumor play, Monday, rumors hit Twitter. You buy ETH call options expiring next Monday. By Friday, premium rises with IV, you sell before Monday's announcement. Monday, news drops, market dumps, but you already banked profit. Example 2. CPI fear play, Sunday, you buy BTC put options. Monday, fear builds, BTC drops. You sell late Monday for profit. Tuesday, CPI releases, market whipsaws, you are already out clean. Alerts versus news. Alerts, rumors, leaks, equals time to enter, official news drop equals time to exit. Final move, track events using TradingView's economic calendar. Enter early, sell before the storm. Ride the hype, skip the crash. How economic events impact options. These events trigger big moves. Ideal for short-term and swing option trades. ETF approvals, big institutions can buy BTC, ETH result demand jumps. Price often rises before approval. Great for call options. Example, ETF rumor leaks Monday so we buy BTC calls expecting BTC pumps before Thursday so we sell before the crowd. CPI, Consumer Price Index, measures inflation. High CPI equals bearish for crypto and stocks. Ideal for put options when inflation is rising. Example, CPI comes in hot resulting in BTC, SPY fall and puts pay big. Fed rate decisions, hike equals bearish, bears hike in the woods. Cut equals bullish, bulls cut with horns. Impacts borrowing, risk, and liquidity. Example, Fed unexpectedly raises rates resulting in market tanks. What will happen is SPY, BTC puts win. Month-over-month data shows whether prices are rising faster or slower than the month before. Great for short-term momentum trades. Example, data signals inflation speeding up so we buy options early and a big profit on the CPI spike. GDP, gross domestic product, measures economic strength. High equals bullish, bulls' horns strike up high. Low equals bearish, bears grab down low. If the bear and bull makes contact with their prey it will be gross. Great for index options, SPY, QQQ. Example, GDP slows causing recession fear and puts on QQQ payoff. In short, ETF approvals equals bullish so we buy calls early, Fed hikes equals bearish, Cuts equals bullish, so we trade with the Fed. High CPI equals short-term put setups. PCE equals caution time to get some rest. GDP, MOM equals guides medium-term direction. Final tip. Get in before the crowd. Exit before the crash. That is how we win. Master the hype. Trade like a pro. Chart confirmation. Relative Strength Index, RSI, plus Bollinger Bands, BB, RSI, 14. The 14 means it looks at the last 14 candles to measure momentum. Above 70 equals overbought time to sell, below 30 equals oversold time to buy. Bollinger Bands, 20 halves, 20 equals uses the last 20 candles to calculate the average. 2 equals plots bands 2 standard deviations above and below the average. Price at lower band plus RSI less than 30 equals buy signal. Price at upper band plus RSI greater than 70 equals sell signal. Elite setup equals RSI plus BB plus low IV plus news equals tactical entry. Stack the zone. High probability entry system. Support is known as the floor on our trade charts equals a smart time to buy a call option contract or buy a buy option contract by placing a bid. Resistance, also known as the ceiling on our trade charts equals a smart time to buy a put option contract or buy a sell option contract by placing a bid. Professional traders do not rush. They wait for 2 to 3 clean touches on support or resistance levels to confirm strength and reduce false breakouts. Once confirmed on the 4-hour chart, they patiently wait for a breakout or bounce. Then, they zoom into the 15-minute chart to analyze structure and volume. As momentum builds, they dial in further to the 5-minute, 3-minute, and 1-minute charts to time their entry with precision using candle patterns, RSI, Bollinger Bands, Greeks, and volume. Confirm with Relative Strength Index, RSI, plus Bollinger Bands, BB, IV must be low, catalyst, news, must be approaching. Do not trade right before big news drops. Instead, get in before the news, when option prices are still low. As the news gets closer, prices rise because everyone is anticipating a big move. That is when you sell to lock in profit. If Bitcoin is at $68,000 and the Fed is making a big announcement tomorrow, you buy a call option contract today while it is cheap. As the news approaches, the option's price goes up. You sell before the news comes out, and avoid the price drop that usually happens right after. Option Vega equals 40. Check this after we place the trade in open positions on the trading platform. Golden entry formula. Low IV plus key level plus RSI plus BB plus catalyst equals sniper trade setup. Thinkorswim playbook. Long call setup. Strike. 5% 10% out of the money. OTM. Strike price. Delta. 0.35 0.45. IV. 25% 40%. Theta. 0.05 to 0.10. Bid. Ask spread. Less than or equal to 30 cents. Position sizing formula. Size equals capital times 0.015 divided by premium times 100. Max risk equals 1.5% of total capital. Exit like a master. Use a 2-to-1 reward to risk ratio. Take 50% profit when first target is hit. Move stop to break even. Exit early if Theta accelerates. Never hold near expiration. Daily trade selection strategies. What to watch for. News catalyst events. CoinMarketCal. Crypto panic. Low IV assets. 25% 40%. RSI plus Bollinger Band. BB. Confluence. Strong support and resistance. High volume movers. BTC. ETH. Sol. ADA. XRP. Less risk more rewards. Set alerts across TradingView. Google. Crypto panic. Pro timeframe sweet spot. Crypto options. 7 days to 14 days option contracts. Stock options. 1 month to 6 month expiry option contracts or whatever date is closes. Avoid same-day expiration strike gold formula. Entry plus exit blueprint before entry ranges. Delta 0.35-0.45, IV 25% 40%. Theta 0.01 to 0.05, Vega 30 plus after trade, RSI plus BB confirm, news incoming exit when IV spikes, price hits target, Theta gets worse or accelerates, Vega gains are in. 2 to 1 reward to risk is met ROI master plan. Strike gold returns, monthly ROI goal 15% to 30%. Risk per trade 1.5%. Reward per trade 3%. Win rate goal 60% 70% monthly growth potential. Invest $1,000 profit $150 to $300. Invest $5,000 profit $750 to $1,500. Invest $10,000 profit $1,500 to $3,000. Invest $100,000 profit $15,000 to $30,000. 3-month compounding at 25% per month. Invest $1,000 profit $1,953. Invest $5,000 profit $9,766. Invest $10,000 profit $19,531. AI Enhanced Study Mode. Master this strategy AI generated study plan. Listen number 1. Exposure, no pausing. Listen number 2. Note key concepts. Write notes in blue ink. Master Greeks, IV zones. Listen number 3. Apply strategy to charts. Listen number 4 plus. Mastery mode. Begin live trades with paper money, a simulated account. Journaling. Perfect practice makes perfect sense. So make sure you are practicing perfectly the right way with the most time efficiency. Mastery formula. 3 to 5 focused listens plus chart practice equals high-level skill. 10 plus listens with journaling equals pro-level mastery. Bonus tip. Teach it back in your own words. If you can explain it, you own it. Final word. Strike gold. This is not hype. This is systematic domination. You now hold the most complete, intelligent, and powerful options formula on the planet. Use it. Enter early. Exit smart. Master the Greeks. Control time, volatility, and direction with surgical precision. Trade like a tactician. Grow like an architect. Win like a legend. This is how we strike gold.